Okay, sorry for the delay, everyone. So it's good to have you guys back here. And let's just get the disclaimer out. Just a quick general advice and risk warning disclaimer. Note that any advice given is deemed to be of general nature, as the information or advice given does not take into account all your particular objectives, financial situation, or needs. Therefore, at all times, you should consider the appropriateness of the advice before you act further. CFDs and Forex are leveraged products and thus carry a high level of risk and are not suitable for everyone. You can lose more than your initial deposit, so you should ensure CFD and Forex trading meets your investment objectives. Strategies and charts in this presentation are for example only. You are reminded that past performance is not indicative for future performance. Now, a couple of interesting questions there on the chat. First of all, it's the FOMC. Why is it not affecting? How is this decision not affecting the market yet? I think there's going to be a delay. It's not going to be immediate. I think we're looking at a minimum of about 6 months. We're month 3 now, so we'll see what happens in the next 2 months. Hopefully, inflation does at least kind of peak, but we are not seeing that as of yet. Okay, all right. Hi everyone. Hi Mary. How are you? Okay, so we've got Japanese yen ding-donging up and down, and dollar Canadian. Yes, we need to talk about dollar Canadian because in like 19 minutes time there's going to be inflation numbers coming up from Canada. Okay, all right. So yeah, books on stochastics and Ichimoku. Let me get back to you on this one next week. There are a couple of good books out there, but it's just not really complete in terms of using it. But I guess it's okay if you just want to read up a little bit. I do know books about Ichimoku Kinko Hyo, but I'm not really sure if there's anything particular just to talk about stochastics. But we can always talk about stochastics, not a problem. Okay, so yeah. First things first, let's talk about the Japanese yen, and then we'll need to go into dollar Canadian as soon as possible before the inflation number comes up. So let's talk about dollar yen for a minute. This is on the daily. I did talk about the sterling yen on the outlook this week. I think that one reaches the projected target yesterday, I believe, but let me just double check. Sorry guys, I just got back from my holiday, so that's like my one-time holiday in it's been years, so just catching up on a lot of stuff right now. So anyway, let's talk about dollar yen. We talked about 136. We've been talking about 136 for 2 weeks now, I think. Yeah, that one, we're above 136. 136 is right now your intraday support level. We're going to talk about that in a minute, but it's at 26 years low for the Japanese yen against the dollar. It is hovering around 136. Let me just bring it up onto the hourly time frame. If you take a look at the stochastics, now it's also a good time to talk about divergences and stochastics. I don't think we need to go into any specifics, but if you take a look at this one, you can see how price is not going anywhere, but the stochastics just dropped down really quickly. So this is kind of forming a hidden bullish divergence on the dollar yen. But let me just caution you on a little bit, because we are right now at 26 years low. For the Japanese yen, we are at 136. That was kind of the projected target that's been used for nearly 2-3 weeks now. A lot of people were eyeing 136. That's why you see that, after that break above 136, it doesn't go really further than 136.50. I think there's a lot of profit taking here. There's a lot of position adjustment going on. Take a look at this one. There's a little bit of a concern with how thin the Ichimoku cloud is. Let me zoom in a little bit. And also, by the way, excuse me for being weird on the chart here. For some reason, I can't turn off the night mode, so it's like all dark, and it's actually hurting my eyes too. But around 135.50, you really want to watch out for 135.50. Any break below 135.50 on the hourly time frame, you need to be a little bit more cautious on this one, because if it does break below 135.50 on the hourly time frame, it might transition below the Ichimoku cloud, at least on the hourly time frame. Doesn't mean that it's going to go into a downtrend. It's just that we might see a much deeper pullback. We could potentially see a return towards 135, 134.50. But right now, if we look at the whole thing, definitely want to watch out for 135.50 and then 135. This is the range you want to watch out for if it does break below 135.50. Okay, so if it bounces off from 135.50 or even from 136, that's even better. But right now, if we take a look at this one, how deep the correction it's going to be, this one is, we need to kind of extend this. We are slightly at about 38.2 in terms of support. It falls into the category of normal correction because it touches 38.2. So if this one bounces off from 136, that would be considered okay. Now, I think there's a lot of other choices instead of trading the dollar yen at this point in time. For dollar yen, I much prefer to wait for a little bit more for pullback. I really want to see this one touch the Ichimoku cloud at least, and hopefully it bounces off 135.50 because that's more ideal in terms of momentum and everything else. It just makes a lot more sense. This one goes into the 20 and then bounces off, forming a hidden bullish divergence on the hourly time frame on the dollar yen. I like the scenario where it bounces off 135.50. So if that's the case, we see a little bit of a turnaround in the momentum. Price doesn't close below the Ichimoku cloud. That's where you want to jump back in if you are planning to go long. I don't think it's a great idea to look for a short on any yen crosses at this point in time. I much prefer to wait for a little bit of correction to happen, and then we could potentially see a move towards 137. I don't really want to go against the trend because if I zoom out, you can definitely see where the trend is going. This is on the daily, and there we go. So definitely do not want to go against the trend on the dollar Japanese yen. So I much prefer to wait for a bounce off 135.50. That's my ideal scenario for the dollar Japanese yen. Okay, my view on silver. Yes, we'll take a look at silver. Okay, so we've got about 30 minutes. Let me just quickly jump into dollar Canadian. We haven't talked about dollar Canadian for a while, so we definitely want to talk a little bit about dollar Canadian. Are we going to be looking at dollar strength here on dollar Canadian? Which we last look at it was 1.2525, 1.25. So we haven't really looked at dollar Canadian for a while. Some resistance, I think we do have 1.3075. That would be what's going to cap the market from the daily. The dollar is still above the 80. I don't see any signs of any divergences on the hourly time frame. By the way, we do have inflation numbers. Let me just read it out for you. The expected year-on-year was jumped to 7%. There are room for it to go to 7.4%. Previous number was at 6.8%, right? But I'll be honest with you. We had the UK inflation numbers today, right? This afternoon. Doesn't really help out with the pound either. Inflation rate was kind of high. It was at 9.1%. It was up from 9%. It doesn't really do much to hold the dollar back. So in terms of dollar Canadian, are we looking at potentially weaker dollar at this point in time or not? Really depends. We are looking at 1.3. So those trading the dollar Canadian, you definitely want to watch out for 1.3. So the scenario is this. Inflation number is going to come out in 11 minutes. We cannot do anything much because on the hourly time frame, we need to see a confirmed close above 1.3 before it can actually go up to 1.3075. Now, if that is going to be the case, risk reward ratio is actually not that great because you need to have your stop losses around 1.29. Right, so taking a look at the risk reward ratio, it's not going to be great. You're looking at about 100 pips stop. You're looking at about 75 pips gain. Doesn't click, right? It doesn't really click. But If you go against the whole trend, it's like going against kind of the major trend right now on the dollar Canadian. I think we still have a little bit of room to go, but at least on the hourly time frame, we need to see a confirmed close above the Ichimoku cloud on the hourly time frame. So you're not going to be doing much until the hour ends anyway. So what I suggest is let the inflation number come up. We can talk about it. We can see how the market look at it. But in terms of making a decision on the dollar Canadian, if you're looking for new positions, I don't think now is a great time to go in for a new long. If you already have a long position, ideally you want to adjust your stop losses to about 1.2950. So maybe slightly higher, but you can have it about 1.2960 if you want to, but let's just put 60. So if you're going long right now, if you do have a long position, let's say of maybe on from this break here, you could move your stop losses closer to 1.2950, 1.2960, and then hold it. But definitely want to have at least your stop loss adjusted for the dollar Canadian. Don't really want to go in long. Risk reward ratio doesn't quite click for me. So think about it. You probably aiming about 75 pips gain. You are going to be risking at about 100 pips in terms of your stop loss. So unless you have a long position, this is not ideal. And even if it is ideal, if it does break above 1.3, we need an hourly close above 1.3 to make a decision over what the dollar Canadian is going to be. Okay, I think across the board we are looking at dollar strength. The dollar index actually bounces off from 104 as well, so we need to consider that. VIX is stable; it's still above 30, but I mean, are we expecting like crazy volatility? Probably not now. I think a lot of traders are actually going to be sidelined because we have the Jerome Powell testimony tonight, right? The afternoon if you're in the US, but that's what the market is waiting for. I think there's going to be talk about how they're going to combat inflation. Why is it after their interest rate hikes, like big hikes, and inflation is not slowing down and stuff like that. That's basically going to be what the testimony is going to be about. The hearing is about today. Linda, how are you? Okay, result the RBA meeting minute yesterday. Nothing new, nothing much to really impact the market. That's what I can say. By the way, for those that are in my Telegram group, if you guys read on it, my account was hacked last week, so just got control of the account. So I'll start posting again tomorrow, starting from tomorrow. But I do apologize for the delay for the past week. Okay, so dollar Canadian, we're good with dollar Canadian. Let's talk about Canadian yen. Okay, dollar Canadian, we could be looking at a weaker Canadian dollar and stuff like that, but the Canadian yen itself, the yen is obviously going to be a lot weaker than the US dollar, right? I mean, if you take a look at the whole thing with the Canadian Japanese yen, this is on the daily. We are actually we actually hit 61.8%. We might bounce this off a little bit around 103. So I'm going to leave 103 there for your reference. But if you go into the hourly time frame, we are actually above the Ichimoku cloud. I think for all the yen crosses, I believe, but let me just double check again. All of them are showing signs of a potential hidden bullish divergences. So if the inflation number comes up high on the Canadian inflation does come in higher at 7 or above 7, we could potentially see a little bit of a gain in Canadian yen. All right, dollar CAD might be stagnant, but the Canadian yen it's where you want to be keeping an eye out for. I don't think we can use this fib here, but so I'm sorry, we still can use that fib. So yeah, we're hovering around 23.6 for now. I think we need to watch out for 104.50. Let me just get that in for you. 104.50 should be the previous resistances as well over here. and there we go. Okay, so yeah, your immediate support for the Canadian yen. If you want to be trading Canadian dollars, I like the Canadian yen much more than the dollar Canadian. There's a lot of uncertainty going on with the US dollar right now, especially with the testimony, the hearing today, this afternoon, depending on where you are from. Okay, but I like the setup on the Canadian yen. If it bounces off on 104.50, just like the dollar yen, I like this one a lot because if we take a look at this one, all we need to do is just wait for the stochastics to go up above 20. Then we might have a hidden bullish divergence on the Canadian yen. I like this one a lot. In fact, all of the yen crosses, I like most of them. We're just waiting for the timing to jump back in. But if you are thinking about going long on the Canadian yen, make sure it doesn't close below the Ichimoku cloud. That's one. In terms of stop losses, you can have it slightly below 103.50, but for target, we want to aim higher. We want to aim for 106, 106.50. We are actually referencing the daily fib for our target, so we are potentially looking for the 78.6 at 106, and if that one breaks, we are probably looking at a potential return towards 108.75, 109. So in terms of potential target for this one, this is actually a great setup because you can transition this one into a swing trade. You can go for 107, 108. All we need to do is just break above 106, and that's it. So you could have one target at 106 and then 107, 108. Okay, so a lot of projections here for Canadian yen. I'll get rid of the daily fib. But yeah, risk reward ratio is awesome because towards 106, you're looking at a potential gain of about 158. And if you transition that into a swing trade, that's just going to be great because you're potentially only risking initially at about 100 pips. But if it does go to 106, then you can actually move it to break even. You can move it to 104.50, 105, want to lock in some profit and stuff like that. This one, it's flexible. This is actually a great setup if you want to transition this into more of a swing trade for the Canadian yen. So any yen crosses here, we are actually looking at a position where it's more of a swing trade setup right now instead of an intraday setup. But I think it's applicable if you are a little bit patient. Don't just rush in. Just wait for the momentum to turn around and then go for it. Yeah, Telegram, it's going tomorrow. I should be posting again. I think I just checked today and the account was good today. What about double top like euro yen on the daily time frame? Can we take a sub position in euro yen? Intraday you can, but just think about it. You're just going against the trend. That's where I want to be a little bit more careful. Also on the euro yen, for example, on the daily time frame, the momentum just crosses up. So there's a lot of risk right now. I think this is the range that we talked about since last week, I believe. We got 144 right now. It's not really a double top per se. Just keep an eye out on this one. But it's very close to 161.8. And if you go into the hourly time frame, the problem with this one and the reason why I'm not too confident going short is that this is still above the Ichimoku cloud. And in terms of support, we are looking at the 50s, right? Like the Canadian yen, it was actually at the... let me just get the number again for Canadian yen. It's 104.50, right? On the euro yen, it's 142.50. So this one is actually more of a confirmed hidden bullish divergence on the euro yen. It's just that right now this is forming more of a pennant, I guess you want to put it that way. So we actually need to see a break above 143.50 or let this one form into an ascending triangle. Ideally, that's what I like. So either you go in quick around 142.50. if you do want to go in at 142.50, if it bounces off there, or maybe even right now you're at 143, it's just that your stop losses are going to be below 142. So either go in now and have your stop loss at about 100 pips, or just be a little bit more patient. If it bounces off 142.50, or wait for this one to break above that 144. So you actually have a lot of options. For the euro yen, I mean, if you're going for swing, right, you want to wait for a break above 144, and then you can have your stop loss here. But if you're going for an intraday trade, you can go short, but you just need to watch out for 142.50. So if you do plan to go short, like, I mean, if you're trading on 15 minutes time frame or the 5 minutes time frame, you could be doing a short trade, right? I mean, you could be going for this, stop loss here, your target over here at 142.50. That's going to give you a risk reward ratio of about 1-to-1. So there's a lot of options depending on how you trade. But you guys know me, I don't scalp the market. So I it's up to you. If it suits you, risk reward ratio 1-to-1, you can go short for about 40 pips, I believe. Yeah, about 40-45 pips if you want to go short on the euro yen. Just make sure your stop losses are at 143.50. Okay. So yeah, let's go back to Canadian for a minute. Number should be out. Just trying to get a number. Inflation rate year on year is actually a lot higher. It's coming in at 7.7%. That's 0.7% from the forecast. It's 0.9% from the previous month year on year number. So it's actually really is actually a lot higher. So okay, so dollar Canadian right now. Leave this one be for a minute. Let's take a look at the Canadian yen. Can we get anything on the Canadian yen? So yeah, as I say, don't rush into this because we need the half hour to close anyway. I don't jump in on the 15-minute time frame. Don't jump in on the 5-minute time frame. News like this, we don't know how is it going to affect the market. We've got the UK numbers today. The immediate reaction, we actually see a little bit of a non-reaction on the UK numbers. It was higher, but it was at forecast. This one is actually way higher than forecast at 7.7%. So best to wait for the Audi candle to close. We got 28 minutes. Don't rush this one. Seriously, just don't rush this one, because this one could transition into a swing trade. So I don't really think that there's a need to rush for this one. If you're planning to go short right now, I don't think it's ideal from a risk to reward perspective. But if you already have a short position, you want to watch out for 104.50. Hello, Amir. How are you? Okay. So yeah, that's CAD yen. Keep an eye out. We'll come back to CAD yen later on. Euro yen. If you are trading on a 15-minute time frame, if you're planning to go short right now, go for this short one here. Like so, just ignore whatever is on the other side. If you plan to go intraday short, just watch out. If it does break below 142.90, breaks below the kind of a trend line that we have right now on the 15-minute time frame. This is not tested. It's only we haven't seen a third touch on this one. But if you do plan to go short on a 15-minute time frame, I'm not saying you can't go against the whole trend, but only if you trade on a 5-minute time frame or a 15-minute time frame. But if you start looking at it from the hourly perspective, then I would just wait. There's a lot of confirmation that needs to be done for euro yen. I'm still an intraday trader, don't get me wrong, but I don't scalp the market. I trade, I open my trades during the UK Open typically, and I close it up before lunch US. I still trade intraday. Don't get me wrong. Yeah, Miss Mary, I know what kind of trader you are. So yeah, There's a lot of it's quite dangerous. It's a lot of risk with this one. Okay, so what else? Okay, let's talk about oil for a minute, and then Bitcoin. There was a request for Bitcoin at the beginning of the session. Let's talk about oil. Okay, here's oil daily. The momentum points. The momentum is actually dropping down really quickly. But if you take a look at the whole thing, we actually do have a support trend line going up for oil. I believe it's also the same on US oil. It's actually within the Ichimoku cloud. I'm just waiting for that momentum to be done. I'm waiting for this one to be done, and then if price bounces off from 107.50 or even 105, I'm actually looking forward towards that bounce. I believe on the XCI it's actually at 100, but on the XBR it's actually what 105. So for oil, I'm actually waiting for a little bit because the commodity market has been really choppy, right? I mean with the whole inflation thing, and then with the whole I think with Ukraine and Russia going really quiet right now, nothing new or wasn't as big of a shock like it was back when it started 2 months ago. Demand for oil has been quite flat, and we take a look at one of the few reasons I've been staying away from oil. Really, after that spike, following the start of the war. It's just that because we don't have a lot of certainty in terms of the correction. If I zoom out, you'll get the whole picture. If I zoom out, if you take a look at the whole thing right now, it's actually quite flat. It's actually in a sideways channel, or it can even still be in a huge symmetrical triangle, depending on how you look at it. But right now, I'm looking for a potential bounce off the support here. We are looking at about 107.50, but potentially at around 105. That's the worst case scenario. If it spikes towards 105, bounces off 105, I would still like to go in long for UK oil. But keep in mind, this is not for intraday traders. This is not for really short-term traders. This is more for swing traders. So keep in mind on the whole situation with oil, because when we talk about picking it up at 105, we could be talking about months, right? You guys that joined in my webinar from last year, you guys know when I picked up oil, that was basically around October, November. I was holding it off until until the war breaks out, right? So that was about 5 months or 6 months trade. That's the kind of trade that I have for oil. So if you guys ask me about oil, that's the only thing I'm gonna give you, because from my experience, trading oil intraday, it's quite risky. Trading oil without patience, I think that's really, really risky. So this one, I will let this one slide. I want to see 105. If it bounces off 105, I like it at 105, because if it bounces off 105, then I can have my stop losses below 100. Then I could be aiming for 120, 125. We're not even looking at a new high. Just a potential return towards 120, still within the overall range. By the way, if you guys want to know what the range is, this one big move, the $36, that's the range for oil, right? So if you take a look at this one, just kind of from a logical way, we see about 70% correction towards 105, 104. Then we want to see a bounce back up towards 120. We see the range getting smaller. We are not expecting a breakout or anything like that. I just want to trade within the range. If you want to trade within the range, if you take a look, if I draw it for you, you'll kind of get what I'm trying to say, right? If I have this within the range, I'm going to change the color to green. Well, maybe purple. Yeah, slightly darker. kind of get what I mean, right? There's a little bit of a symmetry here going on. We are looking at about 70% correction. We are looking at a 30% cut to the range. It's just going to get smaller and smaller. And then what it does is it's actually going to form kind of a triangle again. So that's what I'm aiming for. Just return back to what 120, that sort of stuff. That's what I'm aiming for on oil. Okay, so I am going to get no 0 yeah, that's where my fib is, by the way. I'm just gonna leave it as it is. So what I'm waiting for is a return towards 105. The reason why I'm waiting for that one is it's actually going to be a return towards previous 23.6%, and then I'm going to see a move back up towards 61.8%. The previous one was to 78.6%. Does it work on crypto, US and UK breakout? Not really, not really. Crypto is a different market, right? I mean, it doesn't even close on weekend, so you got to take that into consideration. I think for crypto, I don't think GMT matters. I think the US session is what matters, but I could be wrong. But I just don't see any correlation yet. In terms of crypto, I don't think the US and UK Open really matters much because we're talking about a market that just breaks out, right? It could be any time. That's the thing. What you want to do is more of a price alert thing rather than a timing and stuff like that. Hey, no problem at all. Okay. Anyway, that's UK oil. I'll go back to Euro Yen in a minute. For US oil, I have 100, right? So yeah, in terms of range and whatever not, let me just get rid of it. So similar scenario, similar logic, but this is what we have. That's the same fib that we have, right? Range is just getting smaller again. We're looking at a bounce back towards 23.6, and let me just range this one up. So yeah, potentially about not even around 100. I'm looking at price range going to 100 to 120. Change this to yellow. There we go. Easy, right? Same logic. This one is probably a lot easier as well. We got a support trend line here. That's slightly broken, but if it bounces, if it spikes, touch 100, bounces up, that's what I want to see on US oil. Okay, gold. Quickly touch on gold. I don't like gold at all. Daily, it's flat, 1840, 1850. Hourly time frame might point to the upside, but it's going to be capped at about 1850, 1860. I don't really like this because if you attempt to go in long, if you have a long position in gold, that's a different story. But if you want to go in long gold, that's okay from a logic that it breaks above the Ishimoku club, but your stop losses are going to be huge. You're looking at about $20 range. In terms of target, you're looking at about 14, 15. Is it worth it? It's up to you. But if you have a long position somewhere there, it makes sense to just hold it. But if you do want to attempt to go in long right now, keep in mind your stop loss is going to be about $19 to $20. That's a lot, right? I don't think this is for everyone. So think about it. Risk reward ratio, you're probably risking 0.75 gain, not 1/3. It's not 1/3. Is it 1/3? No, it's not half. Okay, anyway, you're risking a lot more. It's not really twice the risk, but think about it, 2/3 of your potential gain. That's your risk on gold. So yeah, this is on gold. I don't like this. I think there's just a lot of sideways market condition going on with this one. It's pivoting at 1840, 1850. If it's stuck at 1840, 1850, we're not really going to go anywhere for gold. So let me just zoom out and you guys can see it. That's number one. The other thing I don't like about this one is how the range has actually opened up. So, right, you got that. I don't like it when the market does that. It just increases your risk in the market. I like it if it goes into a triangle, but if it opens up like that, I don't really like it. So it's you're just gonna have a wider risk. Now, second of all, you take a look at the stochastics here. See how jaggy the fast stochastics is. I don't really like this at all. This is a really choppy market. Now, there's a lot of reasons for this one. One, we've got the FOMC hiking rates like really big hikes, right? But it also causes uneasiness in the market. So there's that risk aversion that goes on. Some of that risk aversion goes into safe haven assets like gold. But at the same time, gold, if the Fed keeps hiking rates, gold doesn't become really attractive, because to hold physical golds with high interest rate is actually going to cost more. That's one of the few key driver that's going against gold right now. So it's really tough to look at gold, because at one side there's risk aversion going on, runs to safe haven, but at the same time gold is not really great. And then there's a third point where if inflation keep going up, gold is a good inflation hedge, right? So it's really hard, because one, gold could go up because it's a safe haven asset. Gold could go up because it's an inflation hedge. But at the same time, if the FOMC keeps hiking interest rate, gold doesn't become attractive at all. It's actually expensive to hold gold as interest rate goes up. So that's where we see that push and pull with gold. I think if technical traders take a look at this and they say, like, you know what, yeah, we can still trade gold. Just from a logical perspective, it's not that safe to trade gold. And also from a technical point of view, if you take a look at where it's pivoting at 1840, 1850, we are at a lot of risk right now if we think that gold's going to go one way and not the other, because you could potentially have one day that you see gold goes up, and then you jump in and then it reverses, you get out, it just reverses again. So there's a lot of risk with gold. I know most of you that know me, I'm not really too keen on gold in the past year, and that's probably why. How do you decide the ideal breakout on crypto? We'll take a look at that in a minute. But let me just jump into euro yen for a minute. I think there's a question on euro yen position. So see if I can answer that. I have my stop loss in euro yen on 142.50, entry using Fibonacci and stochastics and hidden divergences. If wars to continue until next year, oil will fly to the moon. Probably not. I don't think so. I think the shock has been done. Okay, so your stop loss is at 142.50. I would adjust it lower if you want to have your stop loss. If you have a long position, I still want to have it at below 142, because there's a risk it'll go down to 142.50, snap your stop losses, and then bounce back up, because 142.50 is where we're planning to jump back in. So think about it, it's safer to have a little bit of an extra buffer on your stop loss rather than really putting it at 142.50. At this point in time, if you put it at 142.50, you're opening up to a lot of risks of this touching your stop losses and then it bounces off. Dollar CAD looks like it's forming head and shoulder on the 4-hourly time frame. Is there also a hidden bullish divergence? Dollar CAD 4 hour. Yeah, potentially. I don't think it's gonna form a head and shoulder. I think if you take a look at 1.3 as the shoulder, yes. The neckline is a little bit skewed though. So if I draw it. I kind of get where you're going with this one. So that's the neckline. That would be the head. Neckline is a little bit skewed. So the neckline is actually forming a support trend line. So I don't really want to consider this head and shoulder. But you're correct in looking at the 1.3 as your right shoulder and as your limit. I actually want to see a breakout on this one. But this is how you look at it. So if it does break above 1.3, then we could potentially see a move towards 1.3075. So I'm not against going long dollar Canadian, but it's if you go into the hourly time frame, we might see one more turnaround first before this one continues. Okay, so just be a little bit more cautious, and also it's actually within the Ichimoku cloud on the hourly time frame. Waiting for pound USD on the 4 hourly time frame. Okay, let's take a look at pound USD 4 hourly time frame. Waiting breakout to the upside. Just be cautious of 1.25. I think from last week we had two trades, right? One is pound Swiss, the other one is pound USD. Pound USD doesn't work out, right? But pound Swiss works out. I think in terms of gains, we're still up on that one. I think the sterling Swiss has a little bit more gain than the stop loss on pound USD. Okay, what's going on with the pound USD is that at least on the 4 hourly time frame, it's actually within the Ichimoku cloud. You're waiting for a breakout. You want to wait for this one to break above 1.2250. Yeah, a lot of us are actually waiting for that break above 1.2250. But let me just bring your attention to the daily time frame. And there lies in my concern right now. Okay, if we go by the FIB, we actually have a rejection at 61.8%. That's capping the market. If it does break above 1.2250, at least on the daily time frame, yeah, sure, we could see progression towards 1.25, but the stochastic is a little bit flat, so just be a little bit more cautious, because right now, if we fail to break and maintain a position above 1.2250, I don't think this is actually going to go anywhere. It's actually going to go sideways from 1.21 to about 1.23, right? You need to be cautious of what it is with pound USD. I think this is one of few things that when we talk about what's going on this afternoon, we've got the UK inflation number that was up 9.1% versus 9%. But I don't really see a strong demand from the pound USD. We see a little bit of a spike back up about 50 pips, like nothing really major. But yeah. So I much prefer the yen pairs right now. I'm a little bit more cautious with how the US dollar is going on, with the whole US dollar strength and whatnot. And then we have the testimony, the hearing tonight and tomorrow. We've got 2 days of hearing, but we should get some information tonight about what the Fed is, what the Fed think about the whole inflation thing, you know, how they hike up interest rate. Are they going to be more aggressive to prevent or to prioritize price stability in the market? That is to contain inflation, but if inflation doesn't pick in the next 2 months, then I think the Fed needs to look into more of a more hawkish monetary policy that it needs to come up with to contain inflation. Right, silver. I think my silver chart should be like really clear. We haven't even looked at silver for a very long time, so I'm gonna clear everything. Okay. Silver daily quite flat. We got support trend line. 1, 2, extending it to that. I'll go into the hourly time frame. Hourly time frame really choppy. Nothing much. If you are trading intraday, you're probably gonna be on this fib. This is not ideal because we do have that spike here. I don't like this spike. But if you're trading on the hourly time frame, just be on the lookout for about 2170 to 2180, 61.8 to 78.6%. Keep an eye out on that one. One of the few reasons is that that's where the Ichimoku cloud is located for silver on the hourly time frame. Is it ideal to trade silver? No, because one, I think there's a little bit more or less liquidity in silver. Second, if you take a look at the whole formation in the market in terms of safe havens, silver are not safe havens. Gold is, at least there's something going on with that. But with silver, the overall outlook on silver is that this is really choppy. One, second, it's actually still within a pennant on the daily time frame. If you are wondering what I'm talking about, it's actually this one here. Okay, so we kind of stuck with silver. If it does break below, then I'll much prefer to go in for a short, but I need to see a break below that support trend line, at least on the daily time frame. I don't think it's actually there's anything good with silver, at least not on the daily right now, not on the hourly as of today. Hey, that's okay. Thanks, Protus. Selling New Zealand, selling cat. Okay, do we have time? Yeah, we got time. No rush. Oh, let's talk about Bitcoin. Let's talk about Bitcoin before I go into the sterling cat and sterling New Zealand. Okay. See if I can go into a clear one. Let's see. Okay, sorry, just give me 1 second. Okay, so let's talk about this one for crypto. Like in the case of where we are right now. So let's say the market is like so right now. Okay, and you don't have a position in Bitcoin. It's just the logical way. It's the same way as I taught you guys before. I know, long life. You got this. We talked about naked trading before. All you need to do with Bitcoin is actually naked trading, and you can trade it without any indicators if you want to. All you need to do is this is kind of within one swing high and one swing low, and all you need to do if you're trading it on the hourly time frame, just wait for the hourly to break below this one before you go in short. In terms of target, that's your stop losses. You're looking about 1,935. That's basically about 2,000. That's gonna be your target as well. Risk reward ratio is always going to be 1-to-1. That's the ideal way to trade breakouts on cryptos. This one ignores the American Open or the UK Open. It really is more about price breakouts than anything else. Again, for me, Bitcoins, I look at the daily. I don't look at the hourly time frame, but I know some of you are trading in some small time frame. For example, you're trading on a 50-minute time frame. Do you have a new range to trade on? Yes, you do. You got that low, you got this high. Basically, if it breaks this one, you can have your stop losses lower at this level. If you're trading on a 15-minute time frame, but if you're trading on the hourly time frame, just go by whatever time frame that you have. Okay. So yeah. So for this one, obviously the range is actually going to be smaller. We are looking at what? $700 on this one, so your target's actually going to be smaller. You could go for 700, 800. That's completely fine. Risk reward ratio minimum to be 1-to-1. Okay, so that's one way. If you're trading on a 50-minute time frame, you could go the other way as well. You could go here, there. Now this one, you could go a little bit higher on the target because we got the previous high on that one. Okay, so from here you can make a decision. Do you want to go short? Do you want to go long? Which, in terms of risk reward ratio, which one is a lot better? Okay, but that's what it is. It's more on time frame dependency. You could be trading this on 50 minutes on the hourly time frame. It's going to be different. But this is Bitcoin on the 50-minute time frame. Okay, sorry. Yeah. So yeah, I don't think this is actually dependent on the US or the UK Open. I'm really more focused on price movement with cryptos. Yes, any confirmed breakout needs to have a confirmed close on the candle. So For this one, you definitely want to have the candle close like so. Okay, like I can't draw candles, but let me just ghost it for you. Where's the ghost fit? Yeah, there we go. So if this is a ghost fit, by the way, it's just an estimate, but if it does closes like that, that's where you want to go in short, something like that. Okay. If it goes up and breaks above this, you can go long like so from here. But yeah, you definitely want to have a confirmed close above that breakout line. Okay, so like that's a confirmed close above it. You can go long. Then that's where you initiate your stop losses there. But basically that's what it is, like so. Okay, hopefully that makes sense. Okay, yeah, so it does need to close above it. Dollar yen, that was the first thing we talk about. If you want to rewind that after this, but let me just double check dollar yen for you. We need to take a look at dollar CAD and CAD yen, by the way, right? So dollar yen, for those that missed out, I want to see price move back down to 135.50. It bounces off 135.50. That's where I want to jump back in for a long on the dollar yen. Dollar CAD, I want to see a break above 1.3 before I go in long. So I definitely want to see a close above 1.3. Right now it's actually within the Ichimoku cloud. That's one of the few reasons why I don't really like dollar Canadian. CAD yen, do we have anything on CAD yen? Not yet. Very close, but no bite on CAD yen. I want to see this one move back up above 20 before going long on CAD yen to confirm that hidden bullish divergence forming on Canadian yen. Okay, let's talk about sterling New Zealand and sterling CAD. Okay, do we have anything on sterling New Zealand? Extensions. Do we have extensions? I think this one's for the time frame. Sorry guys, let me just draw this and go back to the other time frame. Yep, that's basically what I'm looking for. We just hit 161.8, moving above the Ichimoku cloud. We could see a little bit of a correction happening back towards 1.95 to 1.9450. Gonna highlight that for you. 1.95, 1.9450. Okay, that's where your support is going to be. If any price pull back to that area, then we will check back. Right now, I don't think it's ideal to go in long. If you have a long position, I think you need to get out because it touches 161.8%. The max it will probably go is towards 1.9650 on the sterling New Zealand. Sterling overall, this is sterling New Zealand, yeah. Sterling overall, it's pretty flat. I don't really see a lot of sterling strength. Sterling yen, we talk about sterling yen on the outlook. We haven't talked about sterling yen today, but we'll take a look at that after this, and I'll do it now. One of the few key reasons with sterling yen that's slightly different is that we have that resistance at 168 on the sterling yen. This is going to cap the market, at least in the short term, until the hourly time frame corrects itself. As long as it doesn't transition below the Ichimoku cloud, we should be good. But if it does transition below the Ichimoku cloud, then we are in trouble. We basically have support coming in at 166. If you do want to go long sterling yen, make sure your stop losses are below 166. I don't think we're moving there, but we could. I don't like this because we're so close to the Ichimoku cloud. We could go into the Ichimoku cloud and then it'll just go sideways. But if you plan to go long on sterling yen, that could be an option for you. Potential return towards 168 on the sterling yen. Could it happen? It could, but in terms of stop losses, you definitely want to have it below 166, 165.75. You're risking about 70 pips for a potential gain of 154. Not too bad. I just don't see the momentum being there for sterling, because if you take a look at sterling yen, sterling New Zealand, sterling CAD, it's all quite flat. Sterling CAD momentum is pointing down. Just be a little bit more careful. This one is below the Ichimoku cloud. We do have a resistance trend line capping the market at this point in time, so keep an eye out on this one. Okay, for as long as sterling CAD is below 1.59 today, that should be the cap for sterling CAD going on for tonight. That's where the Ichimoku cloud is also going to be. So yeah, I mean, do you want to go short on this one? If you do want to go short, if you plan to go short sterling CAD, just make sure your stop losses are at least 1.5925. Yeah. No, it's too close. 1.5940, 1.5935. That would be kind of ideal if you do want to go short. Sterling CAD. Can you go short sterling CAD? Yeah, I mean, if CAD yen goes up, dollar CAD goes down, sterling CAD could potentially go down. We have that Canadian inflation number. I'll be honest with you, I'm not too familiar with the inflation thing with Canada and how the high inflation number is going to affect it. I just don't see that reaction happening instantly in the market right now, so I would be a little bit more cautious trading sterling CAD tonight. Is it a divergence in sterling yen in 1 hourly on the hourly time frame? It still falls under a hidden bullish divergence, yes. That's why I say if you want to go long on this one, you can. Just make sure your stop losses are below 166, because right now if you don't give room to sterling yen, it's just gonna snap your stop loss and could potentially go up. If you don't have a stop loss, it could, if it closes below 166, it could slide down really quickly. So I'm okay with the whole placement. If you do want to go long on sterling yen, have your stop loss like this. I think this is fine. Just have your stop loss at around 165.75 for sterling yen. In terms of target, I would be aiming for that 168. Anything beyond 168, I don't know. We will transition that into a swing trade, but not my number one choice right now for yen crosses. I much prefer like the euro yen or the dollar yen itself. For sterling yen, I'm okay. In terms of risk, it's actually not that much anyway. It's only about 70 pips of risk. So if you do want to take this, make sure you have your stop loss really tight on this one. So I would have it at 165.75. Definitely below 166 if you do want to go in long. Stop loss, I would go for 165.75. Target, I would go for that 168. If you are brave enough and you want to go further, there's a new extension here. You can go by that if you want. You can go for 168.50 if you want to. Just keeping in mind the stop here, resistance at 167. That's where the 61.8% is located as well. But not saying you can't go to 168.50. It could go up to 168.50. But I think 168 is going to be strong enough to cap further progress on the sterling yen. But if it does break above 168 on the daily, obviously that's going to we are not even going to be looking at 168.50. We could be potentially looking at 170 this week. Okay, one final one for tonight, Euro USD. Euro USD, I would actually prefer a long Euro USD. We're still below the Ichimoku cloud anyway, but I think it's due for a technical correction. Are we done yet for this one? I don't think we're done yet. We are slightly just going off above the Ichimoku cloud. If it does close above 105.50, I believe. Let me just have that here. Yeah, so if there's an hourly close above 105.50, then potentially this could go back up to 106.25. But only under condition if it closes above 105.50 on the early time frame. So I need a definite close above 105.50 on this one here. If it does close above that, then yeah. Stop losses, I think it's got to be about 1-1. But let me just double check. 104.69, 104.65 target. Not even 1-1. But yeah, we definitely need an hourly close above 105.50 to even take a long position in the Euro USD. In terms of going short, you could go in short only on a break below 105. Okay, so short position, if price is trading below 105, you can go for a short position. In terms of target, you don't really want to aim any lower than 104.50. Risk reward ratio is about the same going up or down. So your choice on this one. I much prefer go long than go short. But again, it kind of hinges a lot on the hearing tonight. So what Jay Powell's going to say about the FOMC. Definite question from the Senate committee. I believe it's going to be, can you contain inflation by hiking interest rate? Are you going to be hiking interest rate without having the concern of a potential recession in the market? Those are the line of questioning that could potentially play out tonight. So just be mindful of what's going on. Which is better to... We did talk about Bitcoin, 50 minutes, 30 minutes. I think we need to talk about that. Which is the better filter on breakout cloud or stochastics? In all honesty, for breakouts, you kind of not have the Ichimoku cloud. You would go blind like that. In all honesty, like for example on this one, I believe I was using it here on this chart. Yeah, so you would go blind without the Ichimoku actually. So yeah, this is on the early time frame, 50 minutes outlook on this one. Look, Bitcoin right now is actually really flat. I said it's not something to toy around. I brought this up to your attention last week. If you guys were here last week, I don't think it's time to have fun with Bitcoin. Bitcoin is no longer fun. There's a lot of risk involved with Bitcoin right now. Demand for it is actually faltering. I just really find it really funny with how the FOMC hikes interest rate and then Bitcoin kind of falls off like that, as if it relies on the FOMC. I thought the whole point with cryptocurrency is not to rely on any central bank, but yeah, that's my critics on that. But yeah, 15 minutes time frame, you're kind of trapped in between, so it could go both ways for 50 minutes. Stochastic settings are 14.55. Here, I'm just going to leave it there. Okay, so I think that's all we have for tonight. Sorry for the delay at the beginning of the session, but hey, we did talk a lot about stuff here. And yeah, for those that missed out, I did talk a little bit about how the fundamental delay is going to kick off. I don't think, in terms of expecting the inflation in the US to peak, we still have about a month or two to see if inflation picks off. But anyway, testimony tonight. The hearing tonight is basically going to be why the FOMC hike 75. Is it a response or whatever? And are they going to do it again? I think those are the line of questioning tonight. Okay, so keep an eye out. Good luck with your trades.